South Africa's rand firmed on Monday, regaining some ground after weakening last week when the country's central bank signaled a gradual pace of policy tightening and expectations grew for aggressive US rate hikes. Here are the details and other stories making headlines across the continent.
The South African Reserve Bank raised its main lending rate by 25 basis points in a measured move, but its forward guidance was less hawkish than the market had positioned for. Locally, the trade surplus narrowed to 30 billion rand in December from a surplus of 35 billion rand in November. In the equity market, stocks were buoyed by mobile operator MTN Group, tech stocks and a rise in commodity prices, with the Johannesburg All-Share Index. MTN topped the blue chip index, surging 10.11% to 191 rand, a just over 6-year high. Oil rose on Monday as a supply shortage and political tensions in Eastern Europe and the Middle East put prices on track for their biggest monthly gain in almost a year. Meanwhile, Ethiopia's state-owned telecoms operator Ethio Telecom fell 13.6%, short of its first half revenue target, with parts of its network hobbled by military conflict in the north of the country. Prime Minister Abiy Ahmed sent troops into the northern Tigray region to fight rebellious Tigrayan forces, and the conflict engulfed two neighboring states during the second half of last year. Ethio Telecom's revenue rose 6.7% to 28 billion in the 6 months to 31st December, falling short of the company's target. Almost 3,500 base transmission stations belonging to the company were damaged during the fighting in the north, rendering them out of service and costing the company 3.67 billion in lost revenue. The war also led to the closure of some of the company's sales outlets in the area. The Ethiopian government is liberalizing the telecom sector, having granted a new operating license to a consortium led by Kenya's Safaricom last year. Finally, Nigeria was unable to meet its oil production allocation by the Organization of Petroleum Exporting Countries, OPEC, in January. The country was only able to pump 1.46 million barrels per day of the expected 1.683 million in January, although it achieved an improvement of 50,000 on its 1.41 million barrels per day production in December 2021. The African continent's biggest oil producer remained far from meeting its target. When the OPEC allocation for the month was deducted from the actual oil produced, Nigeria in January lagged behind by as much as 223,000 barrels in the first month of the year. But oil prices continued to rally yesterday, with a 17% jump in January, the strongest January performance in a long time, as the expected global supply struggled to keep up with rebounding demand. On the last trading day of January, Brent crude, Nigeria's benchmark, traded for as high as $91, up by over 1.17%, while the West Texas International crude was up 0.68% at $87.63 as at Monday night.